And okay, now we're streaming. We're live. Smile big, guys. Good to see you here. Welcome, welcome, welcome to Bulls versus Bears, the weekly Forex forecasts, our global strategy. Uh, we're going to go through right now. I'm going to share my screen. Yeah, my name is Dr. Greg McLeod, and we have a great program set up for you. We're going to go over what's going to my forecasts, support and resistance levels, and different things as well. And if you can see my screens, just remember that there is, of course, thanks Sean. There is a Good Friday holiday, and so we have a shortened trading week. This is probably note there's no trading, no stock trading on Friday. And then there's Easter Monday in some countries as well. To all you alls. And let's go ahead and get started. Thanks, Sean, for the reminder. Yeah. This is the Bulls versus Bears, a strategic global outlook. My name is Dr. Greg McLeod. I'm a 30-year trading veteran, former Wall Street currency analyst at one of the world's largest Forex broker-dealers in the world. And I'm the founder and CEO of the Elite Traders University. And it's so good to be with you here today on this fabulous Thursday. And I'm going to direct your attention to the risk disclaimer on your screen to make sure you understand all the risks associated with foreign exchange trading. And we are going to go right into, I've been doing this for over 30 years now, and being a trader and trader mentor. And if you're interested in working with me, you can always email me at greg@elitetradersuniversity.com, and we can go ahead at how we can help you. Okay, so let's go ahead and get to I wrote a book called The Gold Rush Blueprint, and I had forecasted gold at 5,000 when it was like 1,800, and so it came to pass. If you want to get a copy of that, you can go ahead and get a copy of that there. Our agenda, we're going to look at the dollar index, which is the driver of the major currency pairs. We have the euro, the pound, the Aussie dollar, dollar yen, dollar CAD. We're going to have gold, silver, oil, S&P 500, economic, but we're going to start with the economic news, and we're going to start with the economic calendar. Okay, and the way we're going to use that, we're going to use my market heat map, an arrangement of currency pairs by percentage change, and that's where you can access the economic calendar. But if you want a tool that can help you in your trading, the market heat map tells you what's hopping, what's popping, what's dropping, what's not in the market. And you can access it for free by just going to the homepage, mymarketheatmap.com. And then you can scroll down and you can have access to one of 6 powerful heat maps. This heat map tells us the Forex majors. Green is an uptrend, red is a downtrend, gray stay away. Very simple to use. And we can see the dollar yen is up 0.49%. And if strength begets strength, dollar yen might be a good trade. But we're not going to trade right now. We do have a live trading program. We actually have a challenge. We have a $50 to $15,000 challenge, and we're going to that's going to be very cool indeed, as we're going to use our spreadsheet here, and we're going to have the challenges. It's $127, a 30-day challenge to take $50 to $15,000. We have all kinds of tools. We have a special strategy for that during the London session, the opening range London breakout strategy, and you're going to be trading with me. And we're going to see if we can scale our accounts using proper risk management and Forex scalping the pip and run way. Okay, so let's go ahead and we might have to restart our economic calendar, give it a kick, because there's here we go. It was a shortened trading week, right? Let's go ahead. So we're going to go to next. Actually, going to go to next week, right? Because we've already. That will be. There we go. Monday, April 13th. There's going to be lower liquidity because of Easter Monday, and sometimes you'll find lower volatility, lower volume. So we saw the first day of Passover, we saw big spikes in gold and silver as a result of the holiday. So Monday, April 13th, we start off with the existing home sales. That's going to come out. We have no forecast. Previous number is 4.9 million. And then we're going to have some Australian data, Westpac consumer confidence change. And that's going to be coming up too. Then we're going to have business confidence out of Australia, and then lots of Chinese data. And even though we don't trade the Chinese renminbi, or the yuan, as it's called, we do trade the Australian dollar, New Zealand dollar, and those are proxies for China because they are the biggest trading partners. Moving right along, we have Tuesday, April 14th. We have lots of U.S. data with inflation data, core PPI month on month. PPI stands for the Producer Price Index, and so we're looking at that. No forecast is given. Previous number 0.5. Core PPI year on year supposed to drop from 3.9% to 3.6%. PPI month on month is supposed to actually drop from 0.7 to 0.5. I like trading the U.S. the dollar yen, or the euro, because the euro is the anti-dollar. And if we have good news, that usually rallies the euro. Okay, that's very important to note. And then if we have bad news, it usually rallies the dollar. Okay, more about that later. On Wednesday, April 15th, tax day. Make sure you have all your taxes done before that the deadline. We do have the Empire State Manufacturing Index, and we're not getting many forecasts. I guess you're getting a lot of the forecasters are getting these numbers wrong. They're approaching the American exceptionalism in the Trump economy with old tools, and the old tools don't seem to give the they're really off, right? Because now American manufacturing is coming back, and a number of things. Well, of course, yeah. And even though we have high price of gasoline, it's not as high as it was under Biden when we had $5 gas. So we're still $1 cheaper. But I missed the $3 gas that we had earlier this year. I'm not going to lie on that. Part-time employment change with 79.4 thousand, and Australian data coming out too. Just lots of employment data. Usually, it's really good for trading the Australian dollar. That's going to be at 21:30. That's going to be about 9:30, right? That's when I trade live. But we are going to actually shift over to the challenge, the $50,000 to $15,000 challenge, taking $50 to $15,000 in 30 days. And so we're going to be doing the London session only. Okay. And then we have more Chinese data on Wednesday. GDP growth rate supposed to rise from 4.5% to 4.6%. Industrial production rises from 6.3 to 5.4, and retail sales supposed to rise from 2.8% to 3.5%. So Chinese data, we're getting some forecasts there. Thursday, we have UK data with the Union Jack flag. We have the GDP year on year is supposed to rise from 0.8 to 1.0. GDP month on month. That's not mom. That's a month versus the previous month. And it's supposed to rise from 0 to 0.1. Then we move on to 5 a.m. We've got lots of euro data. Of course, we want to trade the euro. CPI is inflation data. Consumer price index supposed to rise from 100.71 to 101.9. Core inflation rate year on year final is supposed to drop from 2.4% to 2.3%. And inflation rate year on year is supposed to rise from 1.9% to 2.5%. Inflation rate month on month is supposed to rise from 0.6 to 1.2. That could be bullish for the euro in the short term, because a higher inflation usually means they have to have a policy response of a hike in interest rates. Then we have initial jobless claims weekly. That's a weekly number, and we don't have a forecast or a previous number of that at 8:30. And then moving on to Friday, April 17th, we have inflation rate year on year out of Japan. Supposed to rise from 1.3 to 1.5%. Okay, let's go ahead. So that's the fundamentals, the economic announcements that we're going to be looking at for next week. Let's go ahead and go to the technical picture, the technicals. Coffee Hours with Greg. Again, my name is Dr. Greg McLeod from Elite Traders University, and we are going through the charts and looking for trading opportunities. We're going to start with the U.S. dollar index. The U.S. dollar is the reserve currency of the world, and it's the major driver of our currencies, okay? So let's go ahead and simplify this a little bit. Get rid of some of these. We're going to do our plain chart there, and let's go through this as well, okay? So U.S. dollar index, we're going to start with a monthly chart. We want to get that big 50,000 foot view. And we can see that really over the past 40 years, we really haven't gone anywhere, right? We still are our low 71.17 on the dollar index. U.S. dollar index is a basket of currencies versus the U.S. dollar. You can't really trade it. It's really just an indication of the strength of the U.S. dollar. We can see that from the lows of 2011, we have been making higher highs and higher lows, but we do have a downtrend from the high of 1982, and there we go. So we have our downward trend line. So we're in a triangle. We haven't really, but we do have higher highs and higher lows, but we have lower highs and lower lows too. So we have this triangle on the monthly chart, and we also have some major support areas here. We've been hitting that area for many, this 96.54 area for many, months. And we've been capped at about the 99.72 area. We've had, when we had the higher inflation, 9% inflation, we had, the central bank had to hike interest rates, which made the dollar stronger and made it higher, right? Someone's going to add some support and resistance lines on these major areas. And let's drop it down to a weekly chart. And we can see that we have, again, an uptrend. We are coming across this yellow line here is the 200 simple moving average, U.S. dollar index, bulls versus bears. We are bullish. Dollar index, okay. Keeping it spicy, moving along. Euro dollar, starting from our monthly chart. And we're going to get rid of all of our drawings there. And we can see that we had been moving up. We actually hit the 116 area last week, pulled back to about 114, now we're 115. And we're coming against support, and we could still see some higher highs and higher lows in the, the uptrend to continue. We have some major support coming in here at the call it 115.41 area on the monthly chart. Weekly chart, we could a break below 140, 114.14. We can see a move down to maybe 111, right? So we got this really this consolidation here at this area, kind of a rectangle, and usually what we have is a uptrend and a break. If we break here, we can get down to 111. Okay, bulls versus bears. I am bearish the euro. We got lots of geopolitical stuff going on with the Iran war. Dollar's been very strong. Remove all set, and we're going to remove all drawings. Let's get back to the monthly chart again, and we can see this is the British pound versus U.S. dollar, bulls versus bears. Let's take a look. Higher highs and higher lows, but we do have a major double top on the monthly chart where we've been rejected. You have a 200 simple moving average, currently at one spot 3243. Let's move it down to a weekly chart, and we can see the same kind of pattern that we saw in the euro, which we had a trend up, sideways consolidation, and we are looking at a trend line break that the U.S. dollar getting stronger will drive the pound lower. And we look down to the daily chart, and we can see we're broke below the 200 simple moving average, some indecision candles, so we could continue to drop down. So bulls versus bears, I'm looking at the pound probably going back to the 130 area. So I'm bearish. We're bearish the pound. Okay, moving around along. Let's go to dollar Swiss. Dollar Swiss is usually the opposite of the euro mostly, but the problem is that the Swiss franc is also a safe haven like the U.S. dollar, and we had a low back here at the 70 area, and we're making a higher low a very severe area of 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 support of Fibonacci, like a 786 area, right? So we hit the 786, and we're turning from that area, and so we're getting a little nascent uptrend here, and with both dollar strength, dropping it down to weekly chart, we can see that little uptrend continues, and we're currently trading at 0.7984. Look for a move back to like the 83 area. This is the 618 of that move, and also maybe up to the 200s of moving after 86.16. Bulls versus Bears. We are bullish dollar Swiss. Okay, moving to the dollar CAD, and we can similar position there. Again, we are making some progress, but for the most part, the dollar CAD has been kind of like dead money, kind of sideways uh, price action. But we do have a higher low or same low, like a double bottom here, pseudo double bottom, and we do have some about 3 weeks of uptrend up movement. See if that continues. Move down to the weekly chart, and we see that we are breaking out. We broke a downward trend line. Our downward trend line just barely broken there, right? Bulls versus Bears. We are bullish dollar CAD uh, as well. Okay, let's go ahead and go on the other side of the world there. Let's go to Japan, the dollar yen. Dollar yen is under threat of intervention. The Japanese, with a higher fuel, of the higher fuel costs, and Japan does not, they consume uh, lots of oil, and they don't produce any oil. It puts them at a very tough spot. If they weaken their currency, it really means that they won't be able to, oil will be very expensive unless they have a strong currency to buy that oil. Oil's priced in US dollars. The higher the dollar goes, the weaker the yen gets, and the higher inflation, the higher the price of imported goods like oil for the Japanese people. And so they might have to intervene in their currency if it continues to weaken. Under ordinary circumstances, the yen doing its thing, going up is good for exports, right? But if you're importing, it's horrible because everything is highly priced. Weekly chart, also we looking at uptrend. We have an old high that we can look at to 162.30. We want, if we double top there, that could be a place where the Japanese government may choose to intervene. If they intervene, they could take it down, but they're fighting dollar strength, and the geopolitical, the war that's going on in Iran continues to cause safe haven flows to flow into the dollar and cause it to move higher. So we could see possibly 164. So bulls versus bears, dollar yen. I am bullish dollar yen. Dollar is in firm control, right? Let's go ahead and go to Aussie dollar. Aussie dollar happened before the war, was darling in the uptrend. Still wouldn't rule it out because we have strong employment data. I was talking to Lisa, one of our top students, and all of her children are fully employed in the trades, and the economic picture is positive. Just you have the energy prices are high, and so and Australia has also hiked their interest rates. Their monthly chart, we again we have this major downtrend that we're fighting against. This market tide that's down, and we are running up against resistance. And we have a small inside day candle or inside month candle, which is bearish, which usually leads to further downside. And we see price coming down. We're currently trading at the 0.6911. I see price coming down to the 66.87 area. Bulls versus bears. I am bearish the Australian dollar. Okay. we can put a fib on that, and we can see that we probably come down to 66.85, the 200 moving average, and we have some confluence there with the 38% retracement. Okay, let's go ahead and go across the Tasmanian Sea. Let's go ahead and take a look at the New Zealand dollar monthly chart. Again, that major downtrend is very, very strong, very strong. But we do have support coming in right in this 55.25 area. We could come back and retest it. Bulls versus Bears. I'm bearish the New Zealand dollar. Okay. Let's go ahead and take a look at oil. This is WTI. We can see that it explodes to the upside, and it's the center of attention because of the Strait of Hormuz that's being held hostage by the Iranians, and the United States is trying to rally the allies to open that up. And even though this is West Texas Intermediate, the oil prices are just going up. Brent crude is up too. Bulls versus Bears. We have an old high back here at 126.30. I recently paid $4.95 at Costco for premium gas for my car, and just fill up your tank, because we could see some higher prices in gasoline. Maybe close to the $5, especially if there is Trump talks about raining down, bombing them back to the Stone Age and attacking their infrastructure. If they attack their infrastructure, that oil is going to be off. Remember, law of supply and demand. Increase supply and decrease demand, prices fall. But if you have rising demand and no supply because you blew it up, prices are going to go up. Okay, so we could see higher prices in oil. We're currently trading at the 102.893. We could see 126 on oil. Bulls versus Bears. I am bullish oil. If they do set, they're talking about 2 more weeks of the war going on, and so. But if we get a double top here, we can see a big collapse very fast once the supply comes back online. Okay, let's go to the shiny stuff. Let's go to gold, and let's go ahead and remove all the drawings there. And we had the big move, but we have this inside day small body candle right here with this long-legged doji on the monthly chart. Huge. We were at high of 5,600, and now we're trading about 4,669. Let's go to the weekly chart, and we're just rolling over like rover. And we're looking at this precipitous drop, but we do have a small inside day body candle of here, an inside week candle, which could turn into a bullish candle. We could have a bullish follow through after this, right? So we're currently trading at 4,655. Let me drop it down to a daily chart. You can see we're getting that bounce right now. Maybe we've completed A, B, C correction. I'm short term. Next week we probably would see something bearish, maybe a little bit of a pullback, but no, short term bullish. Short term bearish, long term bullish. We bounced off the 200 moving average like a champ, right? So bulls versus bears on gold. I'm going to be bearish on gold. Okay, silver. What a crazy ride that's been. And I'm looking at this as well from our monthly chart. Huge spike, got to a high of about 121, pull back to 60, and now we're at 73. And I'm bearish silver. If we look at it down to a weekly chart, we can see our ABC correction. Small body inside day candle, but it's still really red. And I think we get another retest of the low. Retest of this 200 moving average, right, with an inside day indecision candle. I'm bearish silver. Okay, let's go to the indices. I know you guys like trading the NQ, like trading the Nasdaq, and it has been a bumpy ride at least. And we can see that, as I said earlier, bulls versus bears last week, that we would be continuing to move down. Moving on down, it's the Jeffersons played backwards, moving on down, right to the west side, to that basement apartment in the ground. Okay, and there we go. So 23% retracement, 22,723. We could still see a move down there. We could actually see a more pronounced move down to the 20,370 on the Nasdaq. Let's walk it down to a weekly chart. We can see just streams of red candles coming on down, and our daily chart. Maybe our daily's getting a little bit of a uptick here, but I would look to short rallies in a downtrend, downward trend channel, and we are, every time we've rallied, we've dropped, we've rallied, we've dropped, we've rallied, drop on. I would suspect we would drop again. So, and we're against the 200 simple moving average, not able to get past that. Nasdaq, I am bearish Nasdaq. Okay, let's go ahead and take a look at the S&P E-mini futures, and we get a little bit of a dead cat bounce, right? Even they say even a dead cat will bounce. Don't blame me, PETA. Don't write me. That's a stock term, and we can see. Interesting that we have like if we have 2 months of decline, we usually have a rise. 2 months of decline and a rise. 2 months of decline, we might get a rise out of that, but that's a monthly chart. Let's drop it down to a weekly chart where we might see, and you see more candles, right? Pullback. If we use this the Fibonacci here on that, we see what the 38% retracement comes in at 6,191. Bulls versus bears. I am bearish this. I think like like the Nasdaq, we get maybe a little bit of a rally, but every time we get a rally, we get a drop. And I think we're setting up against the 200, setting up as resistance. We can see a push down to this 6,191.75 area next week, right? Remember, we have a shortened week because of the Good Friday, but we're bearish. Okay, and let's look at the Dow Jones, the DJIA, the Dow Jones Industrial Average, and we can see that we've fallen quite a bit from our highs. We had a high of about almost 50,000 on the Dow Jones Industrial Average, down to the 45, about 45, 46,403. I'm gonna take a fib off that wick low that we had. That actually was last year, exactly last year, at April, right, when we had the April 1st, 2025, when we had the Liberation Day with the tariffs, right? And we did tag the 38% retracement. We pulled back, but we didn't get the buyers stepped. We can see buyers have stepped in here with that long wick. However, sellers have come in strong, eating into those gains, and we could probably see a move back down to maybe 43,574. That's the 50% retracement or the halfback. So bulls versus bears, Dow Jones Industrial Average. I am bearish Dow Jones Industrial Average. It just doesn't look like we would see much gains there, right? So that kind of wraps things up. But I want to also invite you to participate in our challenge, our 15,000 or $50,000 to $15,000 challenge, and we're actually going to be using a spreadsheet. And we've written spreadsheets before. We've had students take small accounts to large amounts of money very quickly using our spreadsheet. And you have all kinds of support. We have all kinds of we have a community. We have our trend indicator, our market pulse trend indicator that we're going to be using too. We're using the opening range breakout. So there's a lot of things, a lot of support materials that we're going to be using to help you in your trading, right? So we use our trend spotter. We're going to be using our spreadsheet. We're basically shooting for 20 pips a day, being consistent with 20 pips a day. And if you're doing 20 pips a day, starting with a $50 account, in 31 days, you can come up with $14,242 and 51 cents by just incrementally growing your account, starting with a 0.05 lot size and increase. So if you want to be part of our challenge, be part of a great community, and actually uh, scale an account together as a team, then let me know. You can email me at greg@elitetradersu.com, and I'll be more than happy to send you a link. Or if you are watching on YouTube or on School Community, just go ahead and message me, and I will give you the link to join our $50 to $15,000 challenge. It's going to be great. It's going to start April 6th. You'll get your seat so you can start. You can start anywhere in the spreadsheet. If you have $50, you can start at the $50 mark, and then we'll take trades. We're going to be consistent. The whole idea is about having consistency and risk control and building the right way in a community that we can support each other and have the tools. We have a workbook. We have tools. We have videos. We have all kinds of support and live trading with me. So if you want to be part of the challenge, let me know in the comments below, or you can also email me at greg@elitetradersu.com. Okay, and I can also give you the link to that as well, and that'd be very cool indeed to give you the challenge. Let me go ahead and give you the link, and I'll put that in the chat box right here. Right. So here's the link to sign up, and let me go ahead and share the screen here, and then so you can actually so you'll also have access to our Forex simulator that we have, a really great way of practicing. So nobody's coming to save you. They want you to be scared to trade your money so they can trade your money behind closed doors. The game is rigged. Stop getting played by the system. We're taking $50 to $15,000, the Elite Traders Challenge, and you can unlock the Wall Street Advantage. We're going to use a great system, our opening range breakout system during the London session to grab 20 pips. 20 pips, basically, 20 pips to $15,000. That's the challenge. I look forward to seeing you there. Make the spots are filling up fast. It's only $127. So it's about a month of coffee, and you can have $15,000 in your pocket. Okay. All right. With that said, I want to thank you so much for being part of our Bulls versus Bears, the weekly strategy forecast. And it wouldn't be the same without you. I really appreciate all of you. If you have any questions or you want something with me to cover other things, I think let me know, and we'll talk to you later. Peace and pips. Cheers. Bye. Okay, guys, you YouTubers, it's a bonus content, right? Like let's go over Bitcoin. I forgot to do Bitcoin. No, but anyway, I want to thank you so much, my YouTube audience, for watching, and we'll talk to you later. Bye.